So some of you were probably screaming at me, or at least at your screen, saying, no, that doesn't total up to $1,475. It only totals up to $1,375. Correct. So I have corrected that. Now so again, in this situation, your profit, if given these numbers, is going to be $125. Now what if you had your own capital here? You had the full amount to spend. Surely this isn't going to be a cost for you. But hopefully you said, no, there's an opportunity cost of using your money to do this investment rather than to do a different investment. And assuming, this is an assumption, but assuming the market rate of interest is about 10%, it's a competitive market, that's the price to borrow things. In effect, you could either borrow at 10% or lend at 10%. Now in the real world, obviously there's a spread because banks and financial institutions have to cover their costs as well. But in this case, if you use your own money, still a cost. And so even if you had your own computer and your own printer and you used your time and you used your money, this still would be your cost. It wouldn't be your expense. And so again, this is returning to a theme that we talked about back months ago. Hopefully it feels like forever ago, and that it feels like you were a completely different person and the world was a completely different place at that time. The world was a somewhat different place. But here we have again the distinction between expense and cost. And so one of the things to note here is that there will oftentimes be a divergence between economic profit and accounting profit. Because accounting profit, at least in terms of tax compliance, at the upper levels of accounting, there is a lot of work put into trying to estimate opportunity costs and look at the cost of capital and return on investment. So at the upper level of accounting and finance, by the way, I view the upper levels of accounting and finance to be sub-disciplines of economics. I'm not sure your accounting or finance professors would agree with me. Some of them would, but I'm not sure that all of them would. But basically, I view finance particularly as primarily the primary function of finance is to try and actually put numerical values on opportunity cost. Whether that's the opportunity internal rate of return, you're trying to figure out what the benefit of using your own capital is versus return on investment and some other things like that. So the key here is, it doesn't matter whether you use your own computer and printer or you use your own money, this is still going to be your cost. You're still going to end up having an opportunity cost. Now, you're going to make a $125 profit. Woohoo! Now, right now, when it's difficult, if you don't have a job, to go out and find one, and that may be the case for a while, maybe $125 looks like a decent return for you. But most people, when I put this up there, I ask them, would you do it for $125? I said, heck no, that's not worth my time. And I said, no, actually you would, because what does $125 mean? What does this mean? Let's maybe even look at, right, so $125 here means what? It means you are making $125 more than you could be doing anything else. Now you might say, well, look, it's not worth it. $125 isn't worth it to me. Then what you're actually saying is that we have incorrectly calculated the value of your time, the opportunity cost of your time. And in effect, you're saying, look, the opportunity cost of my time isn't $200, it's $700. If the opportunity cost of your time is $700, should you do this? Well, no, because you're going to actually then be making negative economic profit. Your costs would be, we had another 500 there, that would be $1,875. You would be losing $375 in economic terms. You wouldn't be losing it in accounting terms, but you would be losing it in economic terms. How about if your profit not only wasn't $125, but maybe it goes to zero? Would you stop producing this guide? Well, it seems counterintuitive oftentimes for people, but the answer is no, you wouldn't. You wouldn't stop doing this. Why? Well, you've covered the cost of your capital, You've covered the opportunity costs of your time and your energy and your labor. You've covered all of your other opportunity costs. You've covered all of your costs, and if you broke even, that would mean that you are doing at least as well as you could be doing anything else in society. Now, if this, as I mentioned already, if this goes up, or if there's actually a higher opportunity cost, maybe you say, gee, I was going to use my computer, but now in this online age where I have to do everything online, maybe now the opportunity cost of using my own computer has gone up, in which case we would need to recalculate these figures. We wouldn't need to calculate them for accounting terms, at least not for tax compliance reasons, but we would need to recalculate them for profit here. So negative economic profit tells you to stop doing something. Positive economic profit tells you to keep doing something. And zero economic profit means, you're doing about as well as you could be anywhere else. Now, hopefully that makes some sense. The next question is going to be, what would happen if you continued to make $125? You continue to make this profit of $125 in economic terms. This is, and again, maybe here, economic profit is $125. Now, I'd have to talk to some accountants. I have some accountant friends, but it might be, right, if you think about maybe this here would be an accounting cost. Maybe I'll put an A here. This would clearly be an accounting cost. This would be an accounting cost. This would not be an accounting cost. And if you used your own money, this would not be an accounting cost. And so in accounting terms, we would be back up at, see if I can do my math right here, 50, 14, no, yep, 15, 16, what is that, 1164? Nope, I did the math wrong. It's embarrassing here. Nope. Yes, because we would be just down to here. And so we would be at 50 cents, 7, 15, 1157. And so your accounting profit would be, what would that be? $342.50. I guess I could have done that the other way by just adding in $217.15. Yep. Okay. So we have a divergence between accounting and economic profit. That's one thing here. And it's true that most companies make positive profit. But which one is that? Accounting or economic? Turns out that that is accounting profit. So now I'll go ahead and break this up, record another chunk here, but while you're reloading the video or going on to the next video, contemplate, see if you can come up with an answer and commit yourself to an answer as to what happens next. We don't want to forget that what happens next question. What happens next if you continue to make $125? We've already considered the what happens next question if you made negative economic profit. You might make positive accounting profit and negative economic profit, at which point, what would you do? You would go do the other thing where you could make more. If you made negative accounting profit and negative economic profit, obviously you would also go do that thing. Quick side note, it is actually possible to make positive economic profit and negative accounting profit. Usually economic profit is lower than accounting profit, but it actually turns out that you can have that not fully be the case because it's also possible that the benefit that you get out of something isn't just the revenue. Okay, so the question is that you should ponder while you load the next video, which will take you all of 2 seconds, but maybe even write down on a sheet of paper what will happen next if you continue to make $125 in positive economic profit.